Hey, everybody. Welcome back to another episode of the Growth Capital Podcast. I am your host, Justin Dixon, and today we've got Sal Tirabassi. He is the founder and managing director of CFO Pro+Analytics. They are a CFO advisory and services firm providing fractional and interim CFO services to startups and other small to mid-sized businesses. So this is a cool episode because we get pretty deep into some of the things that you should be thinking about if you are a business owner or a CEO, and maybe you're at the point where you have a lot of questions about growing your business and cash flow, more forward-looking things, and fractional CFOs are typically the answer to at least give you some answers to those questions. So we dive pretty deep into things that you can think about as a business owner. We also talk a little bit about AI and what he's seeing as it's helping him do his business a lot more efficiently. So pretty interesting episode. So let's get Sal on the pod. Interested in hearing conversations with private equity leaders, CEOs of private equity-backed companies, and startup entrepreneurs where they share their stories about their career journeys, starting, investing in, and scaling successful businesses, and the important role that having the right talent plays in building a successful business, then you are in the right place. Welcome back to another episode of the Growth Capital Podcast. Here's your host, Justin Dixon. All right, Sal, welcome to the podcast. Thanks for being on.
Hey, Justin, glad to be here. Thanks so much for having me.
Yeah, well, let's get started here a little bit. Maybe give the audience a little bit of an overview of who you are, where you are, and what you're up to right now.
Sure. Sal Tirabassi. I am the founder and managing director of CFO Pro+Analytics. We're a boutique CFO services firm offering fractional and interim CFO services to family and founder-owned businesses, mainly on the fractional side, and on the interim side to companies that are preparing for sale and might already be private equity backed or are looking to sell to private equity. I've got a team of about 7 people. Started the business about 1.5 years ago. Really exciting times in the space, just because there's a lot of talent out there that has got really good CFO capabilities, and we can deliver the services in a very cost-effective manner to companies that normally don't have access to these types of capabilities.
Awesome. And so maybe give a little bit more context on some of the types of clients that you, maybe like your niche is, right? Like what areas are you really good at? Is it manufacturing? Is it home services? Like what are some that you're really kind of
we're actually industry agnostic. What I'd like to tell clients is, there's about 7 different types of business models out there that from a revenue and sort of like scaling standpoint. And most businesses fit into one of those, sort of generically speaking. And then there's some edges that need to be modified to accommodate them. But, we've got businesses in software as a service. We've got businesses that are CPG, some construction, some fund management, asset managers. So it's a variety of business models. I think we try to be very consultative at the outset with the client to really understand what their needs are and really understand how their business model works. And then we do a little bit of matching of talent capability with the company to make sure that we're delivering the right service. But we don't walk in thinking like there's only certain types of businesses that we go after. I think that it's, I've got about a dozen clients now, and I would say probably in another year, I'll probably have more than 3 clients in one category. And at that point, it'll become more of a marketing initiative that might push us to go take all of our know-how and deliver it to the next set of customers in that category. But in the early days, it's really paid off to be agnostic.
Yeah. Yeah. And I guess as you kind of talk about you just started the business, about 18 months ago, I think you said, like what's been kind of the growth strategy? Like, are you finding clients via referral? Are you doing a lot of business development? Obviously, you've had a long career and you spent some time in, I think, private equity or venture capital earlier on. So, like, how has the business development side of it been for you?
So on the business development side, it's all referrals through, a very large set of contacts that I have who are familiar with me and kind of what I've done in my career. And that's pretty much how I've built the business to date. I think I got one client that came to me through an internet search. I think she found me through a post that I responded to on Reddit. Okay. But other than that, it's been all word of mouth and referrals. With that said, I do take the digital presence side of the business very seriously. I did that from day one because I don't really take anything for granted. I think that if you're going to be good at driving your business, you want to make sure that the main channels and sort of the modern ways of communicating with the market are all part of your arsenal of marketing. And that you don't just rely on networking, even though for me, that tends to be the most effective way.
Yeah, it's one of the things, if people know you from the past or get to know you, that's typically the way that, it's easier to get business through a referral source, whether you know them directly or somebody refers you in and says, hey, you may want to go talk to Sal. Better call Saul to get in front of you to get the right things. I'm curious, I do a lot of work with startups and founder and family-owned businesses on the recruiting side. And I'm curious to get your perspective from a CFO side of what are some of the things that you are typically brought in for? Like, I'm assuming there's probably a handful of things that would require a smaller or family-owned business to need a CFO, but maybe not need it on a full-time basis, right? Maybe just need a fractional to come in. How does it typically work, and what's a typical engagement look like for you?
Yeah, typically we roll usually right into cash flow planning. We go right into a weekly cash flow model for most of these clients. And then we'll build a monthly financial forecast that is driver based. It's, a private equity grade financial projection that gives them really a very detailed understanding of their business and is very easy to update and can be a very conversational tool in terms of planning what they want to do. And then there's as part of both of those things, accounting and reporting automatically get wrapped into that. Because if you're going to go ahead and build these tools, you end up digging into the accounting, which most of the time, probably I would say 8 to 9 times out of 10 is pretty messy, and really needs some care given to it. And then on the reporting side, they usually don't have any formalized reporting for KPIs, budget versus actual variance analysis. And we come in with a bunch of tools to be able to do that. And that's where we come in at the strategic CFO level, but when we're doing our assessment and we're talking to the client, a lot of clients do need lower parts of the CFO stack filled in. Most of the times it's CFO plus bookkeeper, because the books do tend to be kind of messy and not really being done properly. If you want to do, even if you're like a family-owned business and you just want to be able to present credibly to a bank or something like that, or you want to go get an SBA loan, it's a much more powerful interaction if you're going in with a projection and financial statements that are prepared, as opposed to handing them a bunch of tax returns, for example.
Got it. And that's kind of interesting. That leads me into my question around the prep for sale piece of it, right? So some of it, I'm guessing you get brought in for more business as usual operations and kind of cleanup and more kind of strategic planning. But are there specific things that you get brought in for for prepping for sale? Like, are you brought in by the founder who wants to sell, or brought in by like an investment banker that is helping a company sell? Like, what's your typical in for those types of businesses?
Yeah. So being brought in for a sale, I'll interpret that a couple of ways. On the fractional side, it's not necessarily a sale, but it's got a lot of similarities where they've got an appetite to grow the business, or they are continually facing liquidity crunches and they just want to have better planning and have the ability to access some capital to like take some pressure out of the balloon. So in that case, it's the founder. And maybe some of them in a longer range scenario are thinking about, this is going to set me up for a sale, but it's not the kind of like jump in. We haven't gotten any that are like, jump in now, we want to sell this thing in 6 months. That eventually is going to come across our desk. And then on the interim side, where and that's sort of a good thing to kind of explain to the audience. So fractional is permanent part-time. We're part of your team. You have us for the foreseeable future. We're basically the main advisor to the CEO and owner. And then interim is the inverse of that. It's temporary full-time. And in that instance, we have been brought in by investment banks who are working usually with a family founder-owned business that is making money and has never really prepared formal financial statements, may not have really done consolidations of their business. And the founder's getting older, they want to sell. And the bank will advise the founder to hire us so that we can spend 90, 120 days, sometimes longer than that, really systematizing their whole finance function, getting all the forecasts aligned, all the reporting done, so that the bank has a really a much easier pitch when they're selling the business out to private equity. And then we might get brought in also by a private equity firm who's already bought into a business and they just need some additional support, or they want to change out the team, and we can kind of step in there and basically make a bunch of changes while they're searching to build their permanent team. And then we hand them basically a finance operation in a nice packaged box with a ribbon on it. And then we walk out the door.
A lot of times I'll get brought in to help fill the full-time role while somebody like yourself is sitting in the interim seat while we're out kind of searching for a full-time CFO and all that fun stuff. Do you ever get to your team poached by the company to be like, hey, we're looking for an interim, and then you do such a good job that they're like, hey, why don't we just hire this person on full-time?
That hasn't happened yet. But it's built into my contract that you can't poach
massive
my
financial
people.
penalty.
You can't poach my people, which means that we can have a discussion about it.
Right. Got it. Yeah, no, I've known a lot of folks like yourselves because I work a lot with fractional and interim groups because I need them when I'm helping to hire a full-time person. So, and sometimes that fractional person is like, oh, well, I'll just stay on full-time and all that stuff. So I'm curious about kind of what you're seeing in the market right now. We're recording this in early September 2025. The private equity world is in kind of a holding pattern. Not a lot of deals are being bought, sold, especially not at the rate that they were in 2021 when anybody could buy or sell a company. Are you seeing? I know you weren't kind of full time doing this back in 21, but are you seeing any signs of growth in that side of the business where you're getting brought in more to help prep for a sale, or brought in by a private equity group that just bought a company? I'm just kind of curious what you're seeing, if there's any movement or momentum on.
I haven't. So I've got about a dozen clients. 2 of them are interim. And the other ones are all fractional in one way, shape, or form. The interim stuff is relatively new. I can't say that I can necessarily sense like an uptick in activity. But that's actually a good question for the people that I know who have brought us in. My sense is that there probably is a decent amount of increased activity. I mean, rates have come down a bit. They're probably going to come down again. That's always like a driver for private equity. What I do see a lot of activity around, which is also part of the capital markets, but different than what you just asked, is, and it's more because of the founder family-owned businesses that I'm in. I mean, the appetite in the private credit markets in these smaller funds that do working capital lines, asset-backed lending, and that kind of stuff is always very active. I hear from those investors all the time.
Yeah. I'm kind of curious to go back a little bit. Like, how did you think about starting the business? Why did you start it? I love to kind of get somebody's origin story around, starting a business, whether it's a software business or a landscaping business or a CFO business.
Yeah, I just had a lot of know-how in the, how to see a business from low levels of complexity to higher levels of complexity, where at the higher end, let's say you're over 100 million of revenue, a few hundred employees, time for a full-time CFO. And, I spent 15 years as a venture capital investor, venture capital / growth equity. And, I got to see a lot of different businesses, did a lot of transactions, buying and selling companies, raising capital. And then I became a CFO for about 9 years. And just all of that know-how, to me, especially with like the changes in technology that are available, and the ability to really like streamline the tools and techniques that you use for high quality strategic financial operations, could be packaged and be made available to a segment of the market that has a smaller budget but doesn't need to hire us full time. So we're still on an hourly basis. If you do the math, we don't charge hourly; we charge fixed rates. On the interim side, we charge hourly, but on the fractional side, we basically don't want any budget surprises for clients. So we really do a tight scope, and we give them a fixed fee. But for that amount of money, we're basically penciling out to a good hourly rate for the work we do, but we're so efficient and high impact that they don't need us to be working there 160 hours a month to deliver an A-grade service. So there's this opportunity with the combination of know-how, tech, and tools to deliver a high-impact service that way.
And I was curious about the name, the Pro+Analytics. So are you kind of also helping to provide more than just kind of fractional CFO stuff? Are you helping them embed some type of software that provides some long-term reporting once you're gone? So maybe talk about kind of that.
Yeah. So, I come from the CFO function from a finance and data standpoint. I happen to know a lot about accounting, but I wasn't trained as an accountant. I'm always like, all the people on our team are, forward looking. The accounting should take care of itself. And if it's not done well, we can advise on how to improve it. And also have people on the team who can come in and fix it. When you get into the forward looking game in this day and age, it's all analytics driven, right? So you need business intelligence tools. You might need some predictive analytics in the form of data science. The financial forecasting and reporting that we do are all analytics and driver based. So that's where that +Analytics comes in. And, we've got 3 clients that actually buy business intelligence services as part of the package. So you've got like strategic CFO with like maybe a thin layer of bookkeeping underneath it. And then off to the side, you might have an analytics person who's really dealing with business operations, KPI reporting, all that kind of stuff. And it can get packaged into one service. There's a lot of overlap between those areas. And my view has always been that the CFO, a really good CFO who's coming at the problem from a forward-looking standpoint, could actually also be the chief data officer of a company, where all the data is basically owned by the finance function and then pushed out to the rest of the organization. That's one model that I've seen work, that would work for a larger organization. Not all of them are set up that way. There's different ways to do it. But I when I was a CFO, I ran the business that way, and there's a lot of benefits that you get out of it. So I just peeled that know-how and I just package it into the service. Not every client wants it or needs it. We don't really pitch it unless they're talking to us about specific things that are analytics driven. But yeah, it's a key component for certain types of clients.
Yeah, and it's also, it's kind of a nice to have if it's better to have it as a service, and then you can bolt it on as needed. I'm kind of, maybe this is an interesting question for you. Like, if there's, sometimes we get founders that listen to this, or small business owners, like, what are some things that a founder should be aware of that may be yellow flags to kind of guide them to being like, I might need some type of CFO support? Maybe they have a bookkeeper, an office manager, or maybe even a controller. But to your point, they're blocking and tackling on the kind of accounting side. They're not necessarily building strategic, forward-looking reporting. So, like, at what point, whether it's a growth number, like revenue number, or people number, or like, what are some things that you see that are good signs to be like, hey, you may want to talk to a fractional CFO to button things up or give you some forward-looking kind of forecasting?
Yeah, I think if you're doing 5 million of revenue, you should be thinking about it. I could make an argument that if you're doing 3 million of revenue, you should be thinking about it. But if you've got questions about your financial future and the financial future of the business that you're in, and you don't have the time to figure them out, and you may not even know how to figure them out, and you also have long-term objectives for continuing to grow the business, and you recognize that if you had somebody on your team who could give you more financial insights, then you should at least have a conversation with a couple of fractional CFOs. I think revenue-wise, once you're in that 5 million range, you should definitely be thinking about it. Mm-hmm. And as I said, you could be smaller than that and be thinking about it. And the service can also be packaged slightly differently depending on what you need, and can be skinny down if you're really kind of in the much earlier stages of your business. I think also, if you find that you are spending a lot of time on your accounting, assessing whether you're making money or not, if you feel like you're getting your taxes done every year is a tremendous lift. If you've thinking about talking to lenders, or have spoken to lenders and have just messed it up because you didn't really present your business the right way, those are all indicators of, you can actually have somebody with a lot of expertise take care of all of that for you and really make you look great, not just like good enough. So it's different types of problems. I often say, like, a lot of our clients have things that keep them up at night, and they don't really know who's going to help them answer them. And if they're keeping an entrepreneur up, 9 times out of 10, it's money related in some way.
Yeah.
And the right fractional CFO is going to help you figure out a lot of things. If you go to my website, you'll see that I built out a set of calculators there that answer a lot of questions that are financially driven, but also related to equity value creation, customer acquisition costs, this kind of stuff. These are all simple tools that you can use just to play around with and actually really legitimately answer some on the spot questions for you. But the reason I bring them up is that each of those in some way, shape, or form represents a problem that could be keeping somebody up at night.
Yeah.
And that's where the fractional CFO really can play a strategic role for these business owners. And certainly my calculator list isn't totally exhaustive, but if you're an entrepreneur and you're trying to build a business and you've been doing a reasonably good job, but there are things that give you anxiety or that you don't really know the answers to, a good fractional CFO is going to have a lot of perspectives for you.
Yeah, no, I think it's smart because then, every entrepreneur has something that keeps them up at night, whether it's customer acquisition or revenue or whatever. There's a myriad of things. And sometimes getting the answers are, the way to sleep at night, because then you get the answers and you can use that data to action what you're going to do next. You mentioned something kind of interesting earlier around talent. You said there's a lot of good talent out there. I'm assuming you're meeting in the kind of senior level CFO space. Are you seeing that you're, obviously you've built this to a 7-person team and everything. I'm curious about the talent side, because there's a lot of, there's a lot of interesting CFO talent out there, but a lot of them, are they interested in kind of being more fractional as they, get later in their careers? Like, is that kind of what you mean, where there's a lot of good talent?
Yeah. And so I think, with our methodology, it, I think, helps crystallize in the mind of CFO talent, what does this job opportunity look like? And there's two things I think that have happened since COVID that are great for our business. One is everyone's minds opened up to video communications. And so that gives business owners the opportunity to shop around for fractional CFO talent in faraway places. I don't need to be in your office every day to be effective. We've got clients all over the country, and that's not an issue in terms of servicing them. The other thing that's happened is that with COVID is that I think the freelancing market, I should say the fractional market, became a lot more formalized, as now on the talent side, they've recognized, like, hey, I can use these tools to service people more effectively, and I don't need to be in front of them all the time. And as people, are kind of maturing through their careers, they want more schedule flexibility and variety, right? And that's really what we can provide them from a talent standpoint. That's very attractive. It's, they could be working on 3 to 4 different clients a month. They work directly with the CEO and the owner, which they may not get in another opportunity. Let's say if they're at the VP of finance level, embedded in some organization. So there's a lot of attractive aspects to it. And people who want schedule flexibility, problem challenges that have a lot of variety to them, we can fill that niche for the talent.
Got it. No, it makes a ton of sense. Cause I've definitely seen a lot more. When I fill CFO roles, I get a lot of people responding, hey, I'm only really interested in fractional. So if I ever get those, I'll send them your way, and maybe
I appreciate that. That would be awesome.
Help out. We can't talk about or not talk about AI. And obviously in the accounting and finance world, there's a lot of tools that are coming out that leverage AI that help people do their job better, faster, easier, et cetera. I'm curious, are you guys leveraging any tools that are AI specific that have allowed you to maybe not hire another person, or maybe just allow you to do what you all do more efficiently?
Yeah, I've got a lot of thoughts on that. So I write a blog where I talk a lot about tools and techniques for finance and analytics. And so I've been around this stuff, and I'm a very early adopter of technology that can help me do things more quickly. I would say that in terms of like formalized AI-based tools, it's still on the finance side. There's definitely things like Claude or Copilot that you can introduce into your workflows that can help speed things up. Not to the point of necessarily eliminating people, but making things more repeatable and efficient and reliable, which counts for a lot. And I can give some examples of those if you want to get into it. But the piece that I would point out to people, though, that where AI and these agent AIs really become very powerful in quick to implement systems are when you integrate AI agents, either Claude or ChatGPT. These are the ones that are most accessible, and you're connecting them through workflow tools like Zapier, Make, or N8N. These are for people who aren't familiar with those. These are platforms that say, I use Gmail and or I use Google Sheets, and I'm using Claude to connect into QuickBooks. Whenever I produce a new invoice in QuickBooks, I want Claude to take that, do some transformation for it, and then dump it into a Google Sheet that I can just have available on my phone, so I don't have to go in QuickBooks, and I can just look at a list of all my open invoices. Very simple. And to do that connection, you can use Zapier, Make.com, or N8N. It's like the glue that brings intelligence together with data repositories that you're using, like QuickBooks repository. Claude, read the repository, convert the data, dump it into a place where I can view it as an entrepreneur, and I know like all my invoices that are supposed to go out. I just need a simple tool to do that. And there's a lot of ways that you can use that also internally within the finance function. So I would say monolithic AI systems. There's some new accounting systems out there like Campfire, Rillet, that are integrating more with AI or using AI. But for the practical day-to-day execution, think more in terms of an AI agent with a workflow engine like Zapier, Make.com, or N8N to glue things together for me so that I can build like an automated workflow. I test out AI for marketing, and it's funny. I just tested one out last week to do some LinkedIn posts, and I found it to be like a little too. I mean, the writing was really good, but I just wanted to see what this would look like, so I let it run for a week. But actually, the stuff that I was posting out of was I read the MIT came out with this study on the use of AI in businesses. And it had a lot of really good insights. And one of the big insights was that in finance and back office operations, that's where AI is starting to have a lot more traction. Anyway, that article, I read it, and I summarized some things that I liked about it and had this tool turn it into these LinkedIn posts for me.
Nice.
And then I had it hit LinkedIn a few times a day. And then one of my friends texted me and said, "Are you using AI to post to LinkedIn?" And I was like, "Yeah, I'm actually testing something out." And I'm not actually going to end up using that tool. I may in the future at some point, but yeah. So there's a lot of different ways. The other thing I would say to people about AI, I just wrote a blog post on it, which is that I did these two blog posts. One about a month and a half ago where I was comparing Claude to Copilot if you're an Excel user. And I use Claude a lot for cleaning data. When we're doing the analytics stuff, we use this part of Excel that's called Power Query.
Okay.
It's the data transformation layer that can connect to Excel. It also works with Power BI, which is the analytics platform that we use from Microsoft. But Power Query, you could spend a lot of time like using the GUI, or you could just go to Claude and say, this is what my data looks like. Write me the code to transform it into this. And
right.
With 2 or 3 attempts, it actually can do it for you. And so I wrote a blog article about the strengths of Copilot versus Claude in an Excel environment. But recently, Microsoft came out. It's in beta right now, and it's in my blog post when it's actually going to be formally launched. There's going to be a function inside of Excel called Copilot, and it's pretty cool. It's like you could have a table, and you could just go to any random cell and type Copilot, put in a prompt, and it could be like a table of like credit card expenses, right? Okay. Date, amount, vendor, and you say add a column that categorizes the expenses by category and make up the categories for me.
Yep.
It will actually scan the sheet, find what you're looking for, insert the column, and make like an intelligent list of categories for you based on what the vendor sounds like. And it's a function that you use in Excel. So I'm a big fan of Claude, but I think now that they're trying to embed Copilot much more deeply into the functionality of Excel, that's going to really take off soon. And it's going to help a lot of finance people do their work much more effectively.
Well, it'll also help people like myself that aren't Excel gurus. And if I could just say, I've got this list of data, or I've got these, 2 data sets, and I want it to do something, I can do what you just said, do this thing, and it'll do it, as opposed to me having to write this if then, code or exactly, solve this problems thing. So, I guess one thing that I guess I have a little concern about, and maybe you don't, is just like, financial data is sensitive and can be sensitive. So like putting this information, linking something to QuickBooks that then puts it into an LLM, is it training on your data? Is my data getting out into the world? Like, and obviously you can pay for, if you're using like ChatGPT, you can pay for the business case and it says it's not training on your data and all of that fun stuff. So is there a way to make that less risky, or just for
you need to use you need to use a paid version, and you need to move the slider over, like, don't use my data for training.
Right.
You have to do that. Like, listen, if you're bootstrapped and it's early days and you're having it handle like some basic financial information, maybe you don't care. Yeah. I care. And so, move the slider over, get a paid version.
Yeah, pay this $30-$60, whatever it is a month. And yeah.
Yeah. You can get into these for like $20 a month. Usually they're discounted if you pay annually in advance.
Yeah.
But
got it. Okay. In fact, that's just always the thing that I will worry about, is just privacy of data and all that fun stuff. Maybe I'm a fairly risk averse person by nature. So
yeah, Anthropic just came out with a new user agreement today. It's in my email. I haven't read through it yet, but they've always been like, we don't use your data. But I was just reading through it, and they're definitely, I think, making some changes where I think they're going to go the ChatGPT route. Maybe, don't quote me on that.
Yeah.
Do your own research, but I think they might be going the route where you can select to opt in or opt out.
Got it.
So I didn't get a good read of it, but it just hit my email today.
Got it.
So because I subscribe to that, and to I subscribe to ChatGPT also, and obviously I get Copilot with my Microsoft license. But
right. Awesome. Well, Sal, this has been awesome. I guess I'm curious a little bit about, you've been in business for a year and a half. If we jumped on a podcast 12 months from now, what's maybe 1 or 2 things that you would like to see happen in your business that would make that podcast, really, really awesome to talk about?
I would love to be able to talk about outbound marketing being successful for me. And the whole concept that we started out earlier in the conversation, like it's all coming through referral. I like testing out marketing and engaging with audiences. Obviously, in a B2B sale, it's got different facets to it, but I would love to be able to say, hey, I tested out a couple of different marketing campaigns. This thing worked for me. I understand what my customer acquisition cost is and, what my conversion rates are. That would be a fun conversation.
Well, if you do solve that puzzle, that's probably $1 billion business for any B2B service provider, because it is, it's not easy to get in front of all the eyeballs, because there is so many tools that will just, you just tell it, create a 3 email drip campaign or a 3 LinkedIn post campaign and then launch it. And there's a lot of noise out there, a lot of AI noise. So if you solve that, let me know for sure. Awesome. Well, no, that would be something we could definitely talk about a year from now. But I do want to end the episode with a 3-pack of questions that I ask every guest. So first question here is, what's an influential book or podcast that you would recommend to the audience?
Influential book is Never Split the Difference by Chris Voss.
Yep.
He is if you don't know him, he was the head hostage negotiator for the FBI, and then he wrote a book on negotiations. I think the most valuable parts of the book are not necessarily about how to be an effective negotiator, but how to just be a more effective communicator.
Yeah.
There's a lot of aspects to what he talks about that can just help you daily. And
I've read the book. I've listened to it. I've seen him on a bunch of podcasts. So yeah, I've had that book recommended before, and I've read it multiple times. So I definitely think it's a good one for sure. So if you haven't read it, definitely check it out. What's your favorite thing to do outside of work?
Outside of work, I like to hang out with my family. I work out. I try to work out, 5 days a week. I'm an early riser, so
okay.
I try to run to the gym at 5:30 in the morning, get a good workout in, and then run home.
Even in the Connecticut winters, you're running?
Yeah. I just put gloves and a hat on. It's about a mile run to the gym. It's a good warm up. Bang out a bunch of sets, and then head back. I enjoy cooking on the weekends. I make a mean grilled pizza on a gas grill, outdoor gas grill.
Nice.
So that's
fair enough.
Pretty much what occupies my time outside of work.
Nice. All right, last question here. Favorite vacation spot?
Favorite vacation spot. I am particularly partial to Madrid, Spain. I spent some time there as a young professional working, and I really, I'm very familiar with Italian culture, as you might imagine from my name. I speak Italian the whole 9 yards there.
Nice.
Love going there too, but Spanish culture is they're very friendly, kind people. They know how to have fun, and it's just a beautiful, very accessible city with lots of things to do. So I really enjoy that. I mean, sunny mornings in Madrid with having a cup of coffee outside in like perfect weather is a great way to just enjoy a very urban setting.
No, sounds quite lovely. Sounds quite lovely. Well, Sal, this has been great. I guess if people want to reach out to you, maybe learn about your business, maybe they're a CFO that are listening to this and they don't want to be a full-time CFO and they want to be a fractional, like what's the best way to connect with you? Yeah.
Webinar.
Awesome. We'll try to sort that out and add that in the show notes. Yeah, hopefully we can get that in there before we launch. So awesome, Sal, man, this has been great. I really appreciate your time. Thanks for being a guest on the podcast. I hope you found at least one actionable insight from this episode of the Growth Capital Podcast, your one-stop shop for insights from private equity leaders, CEOs, and startup entrepreneurs on starting, investing in, and scaling successful businesses, as well as the role having the right talent plays in growing a successful business. It would be greatly appreciated if you would rate and review this podcast. And if you're watching on YouTube, please like and subscribe and drop us a comment so we can expand the audience of this podcast. Thank you for all your support, and don't forget about upcoming episodes dropping every Tuesday.